With raging wildfires, devastating floods, deadly heatwaves, climate change is no longer a distant threat. It's here, and it's rewriting the rules of insurance. Across the globe, insurers are being forced to rethink risk as billion-dollar disasters become the new normal. In this video, we'll explore how rising sea levels, extreme weather events, and climate-related catastrophes are shaking up the insurance industry, from pricing premiums to rejecting policies in high-risk zones. Stay tuned, because what you learn today could affect your coverage tomorrow. Welcome to Insurance World TV, your premier insurance education channel, where we simplify complex topics and keep you informed and protected. If it affects your future, we are talking about it right here. Today, we are diving into a topic that's shaking up the insurance industry across the globe: the impact of climate change on insurance. As extreme weather events become more frequent and severe, insurance companies, policyholders, and entire economies are being forced to adapt. Here's what we are going to cover in this video. 1. The rising risk: how climate change is increasing the frequency and severity of natural disasters, and what that means for insurance claims and coverage. 2. How insurers are responding: from new technologies to innovative products, we'll look at how the insurance industry is adapting. 3. The financial impact: what climate change is costing insurers, policyholders, and the global economy. 4. How you can protect yourself: practical steps you can take to stay covered and climate ready. 5. A call to action: why this issue matters beyond insurance and how we can all build a more resilient future. So buckle up, we are about to explore how climate change is not just transforming the planet, but transforming protection itself. Let's get started. Topic 1. The rising risk: how climate change is increasing natural disasters and insurance claims. Let's start with the most visible consequence of climate change: the rise in extreme weather events. The surge of extreme weather events. Storms are stronger. Droughts are longer. Fires are fiercer. And every time disaster strikes, insurance companies pay the price, resulting in a spike in claims. In Kenya, we've seen record numbers of payouts in flood-prone areas like Budalangi, informal settlements in Nairobi and Narok. Prolonged droughts in northern Kenya have wiped out livestock and crops. These disasters used to occur once in a decade. Now, they're happening almost every year. Globally, 2023 alone saw over $100 billion in insured losses due to natural catastrophes. For insurers, that means recalculating risk models. For policyholders, it means facing higher premiums, or worse, no cover at all. Across the globe, and right here in Africa, we are seeing more frequent and more intense floods, droughts, wildfires, and storms. These aren't just headlines, they're events that directly impact lives, property, and the insurance industry. So what does this mean for insurance? Simple: more claims, more payouts, and more risk. When an insurer writes a policy, they are betting on probability. But climate change is shifting the odds, making yesterday's risk models unreliable. More claims mean more money going out. Insurance companies are being forced to rethink how they assess and price risk. In many regions, premiums are rising, especially for flood, fire, and crop insurance. Some providers are even refusing to cover certain high-risk areas. It's not just property either. Travel insurance, life insurance, agriculture, and even business interruption policies are all being impacted. Climate-related risk is no longer isolated, it's systemic. The bottom line: Climate change is making insurance more necessary, but also more expensive and harder to get. That's why it's critical for policyholders to understand their risks and review their cover regularly. Agricultural and business disruption. Agriculture, the backbone of our economy, is taking a serious hit. Irregular rains and rising temperatures are affecting yields, pushing up the need for crop and livestock insurance. And it's not just farmers, businesses, especially in manufacturing and transport, are facing more interruptions. Insurance for business continuity and supply chain protection is now more essential than ever. What insurers are doing? Insurers are not sitting back. Many are adopting satellite-based risk analysis, updating flood maps, then even partnering with climate scientists. Others are excluding certain covers in high-risk zones or introducing parametric insurance policies that pay out based on weather triggers, not damage assessments. Adapting to a new normal. As climate change accelerates, one thing is clear: insurance must evolve. Whether you're a homeowner, a farmer, or a business owner, understanding climate risks will be key to protecting your future. This is not just a challenge for insurers, it's a wake-up call for all of us. Has your insurance policy kept up with the climate? Talk to your insurer, ask the tough questions, and most importantly, stay informed. Topic 2. How insurers are responding and adapting to a changing climate. Climate change isn't just changing the weather, it's changing the way insurance works. But the good news is, the insurance industry isn't standing still. Let's look at how insurers around the world, and right here in Kenya, are adapting to this new climate reality, from new technologies to innovative products. First, by using data analytics and climate modeling. Insurers are investing heavily in big data and climate science. Through advanced analytics, AI, and satellite modeling, companies can now predict where the next flood, drought, or storm is likely to hit. This allows them to assess risk more accurately and tailor policies to reflect future, not just past, conditions. This means underwriters can now adjust premiums more precisely based on your location, elevation, construction materials, than even your building's proximity to natural hazards like rivers or forests. Secondly, through innovation of new insurance products. Second, we are seeing the rise of new and innovative insurance products tailored for climate-related risks. One example is parametric insurance. Unlike traditional insurance, parametric insurance doesn't require you to prove your loss. If a specific event occurs, like 200 millimeters of rainfall in a day, you automatically get paid. It's fast, efficient, and perfect for farmers, event organizers, and communities vulnerable to extreme weather. We are also seeing expanded microinsurance offerings, low-cost, accessible cover options for low-income households and smallholder farmers, who are often the most exposed to climate risks but the least able to afford traditional insurance. Third, by collaboration and prevention. And third, insurers are not doing this alone. They are collaborating with governments, NGOs, and international organizations to build more resilient communities. In many cases, insurers are helping fund flood defenses, educate communities, and shape climate adaptation policies. In fact, prevention is now becoming part of protection. Insurers are rewarding clients who take proactive steps, like elevating homes, installing fire-resistant roofing, or switching to clean energy, with better premiums and policy terms. The insurance industry is evolving fast, but it's also raising the bar. To stay protected, policyholders must evolve too. Adapting to climate change isn't just about surviving disasters, it's about preparing for them. And insurance, when done right, is a powerful tool for building that resilience. Whether it's smarter data in new products or strategic partnerships, the industry is stepping up to meet the challenge. Up next, we talk about how all this affects your pocket and your peace of mind. Topic 3. The financial impact: what climate change is costing insurers, policyholders, and the global economy. Now that we've seen how insurers are responding to climate change, let's talk about the money, because the financial impact is massive, and it's hitting both insurance companies and policyholders hard. Climate-related disasters are becoming more frequent and more destructive, meaning insurers are paying out more in claims than ever before. In fact, in some regions, insurance losses due to climate events have doubled in the past decade. To cover these growing costs, many insurance companies are increasing premiums. That means if you live in a flood-prone, drought-prone, or fire-prone area, you're likely to pay significantly more for your coverage, or worse, struggle to find an insurer willing to cover you at all. The reinsurance ripple effect. Even the big global reinsurers, the companies that insure your insurance company, are feeling the pinch. When they raise their prices, that cost gets passed down the line, right to your policy. This domino effect is already happening. Some major reinsurers have reduced their exposure in vulnerable regions, meaning local insurers are left to carry more risk, or exit the market altogether. Impact on households and businesses. What does this mean for you, the policyholder? Well, higher premiums, more exclusions in your policies, and longer claims processing times during high-demand seasons. And for small businesses, especially in sectors like farming, transport, or real estate, the financial uncertainty can be crippling. Without affordable insurance, recovering from a climate disaster becomes nearly impossible for many families and entrepreneurs. That's why some governments and insurers are now considering public-private partnerships to subsidize risk and prevent insurance gaps from widening. A global economic challenge. And let's not forget, this isn't just about individuals. Globally, climate change is now considered one of the biggest financial risks facing the economy. Disrupted supply chains, damaged infrastructure, and volatile insurance markets all add up to billions in economic losses every year. It's clear, climate change isn't just an environmental issue, it's a financial one. And it's changing the way we all need to think about protection, planning, and resilience. Topic number 4. Protecting your future: practical steps you can take to stay covered and climate ready. So far, we've seen how climate change is reshaping the insurance landscape, from rising risks to financial fallout. But what does that mean for you personally? What steps can you take to stay protected, insured, and ahead of the storm? The good news is, you're not powerless. Here are practical steps you can take to build climate resilience and protect your financial future. 1. Review and update your insurance cover. Start by reviewing your insurance policies. Is your home adequately covered against floods? Do you have business interruption insurance if extreme weather shuts down your operation? Are your crops protected against drought or pests? Work with a trusted agent or broker to identify coverage gaps and explore add-ons like flood, fire, or parametric insurance. The risk is real, and being underinsured can cost you more than the premium ever will. 2. Take physical risk mitigation measures. Insurance is great, but it's not enough. Reduce your exposure. If you live in a flood-prone area, elevate your home or install proper drainage. If you're a farmer, consider drought-resistant crops and water conservation systems. Some insurers now offer discounts for clients who take proactive steps, like installing fire-resistant roofs, storm shutters, or backup generators. 3. Go green to save in the long term. Switching to renewable energy and sustainable building materials isn't just good for the planet, it may also qualify you for lower premiums and green policy incentives. 4. Build an emergency fund. Even the best insurance won't cover everything. That's why it's wise to build an emergency fund, enough to cover at least 3 to 6 months of expenses. This gives you breathing room after a disaster, before any claim is settled. 5. Stay informed and involved. Finally, knowledge is power. Stay updated on climate risks in your area and engage in community resilience programs. Support policies that promote sustainable development and disaster preparedness. Protecting your future starts with understanding the risks today and taking action before the storm hits. Conclusion. We talk about reasons why this issue matters beyond insurance and how we can all build a more resilient future. We've talked about rising risks, rising costs, and how insurers and individuals are adapting. But let's zoom out for a moment. Climate change is not just an insurance issue. It's an economic, social, and human issue. When climate disasters strike, the hardest hit are often the least prepared. Low-income families, small business owners, and farmers living in rural areas, many of whom may not even have insurance, lose everything. Insurance plays a crucial role in recovery, but it cannot stop climate change. That's why we all need to be part of the solution. So, what can be done? Governments must invest in resilient infrastructure, better drainage, coastal barriers, drought-proof agriculture. Businesses must lower their carbon footprints and build green supply chains. And yes, insurers must keep innovating, creating affordable products and pushing for climate-smart policies. But it also comes down to you and me. Our choices matter. The way we build, consume, travel, vote, and even invest can either fuel the problem or help fix it. Together, we build resilience. At Insurance World TV, we believe that knowledge is power and action is even better. Start conversations in your community. Support local climate efforts. Educate yourself and others. Let's raise awareness not just about insurance, but about responsibility. In a world facing climate uncertainty, one thing is clear: the more informed and prepared we are, the safer and stronger our future will be. So let's adapt. Let's protect. And let's rise to meet the challenge together. Thank you for watching Insurance World TV. If you found this video helpful, hit that like button, subscribe, and share it with someone who needs to hear this. Let's build a resilient future, one policy and one person at a time.